Hello, Profit Hackers. I'm Jeremy Lott, the Chief Visionary for Foundation Accounting and Consulting. I owned a construction company for about 15 years before making a change to accounting because my accountants sucked. My goals are to simplify accounting for construction company owners, fuel your profits, level up your cash flow, and help you grow in a financially responsible way. So let's go. Hello, and welcome back to the Contractors Profit Hack Show. I'm Jeremy Lott with Foundation Accounting and Consulting, and today we are going to continue our conversation about bidding and how to bid a job, right? So step number one was to bid a process. Step number two was to figure out all of your costs for each step in your process. Step number three, we're going to mark up those costs. Step number four, we are going to compare that back to the market. All right. So I want to continue our conversation about costs. In our last episode, we started this conversation and we covered our direct costs, the items that we can easily assign to specific steps and specific customers in that process, right? So now what we're going to do is we're going to talk about all those other things that go on the truck to the job site that you can't really assign to one specific job. Examples of this are insurance, cell phones, vehicle expenses, right? All of these different things that need to be spread out over multiple jobs, right? I don't want to just take my insurance bill and attach it to one customer because I probably won't get that job because my price will probably be way too high, right? So instead, what I want to do is I want to spread it out over all my jobs. Okay. So quick story about this along these lines. When I was a young parent, my daughter, who was about 12 at the time, she loved to throw the football. And we would go out into the cul-de-sac and we would spend an hour or whatever just throwing the football out in the cul-de-sac. Well, I would always tease her that I didn't want to get my arm tired. And so I would switch and I would throw with my left arm, right? Well, she picked up on this and thought that was kind of funny and decided that she was going to learn how to throw the football with both hands. And so she spent a lot of time out there throwing the ball with me and using both hands to throw the ball. Well, one day, some neighborhood kids came around, a bunch of boys, and we were standing outside with the football, and they started teasing my daughter and mocking her for being a girl and being out throwing the football. And they kept it up for a second, and then I stepped in and I said, "Look, guys, I guarantee you she can throw this football farther with her left hand than you can with your right." And they, of course, accepted that challenge and knew immediately that there was no way she was going to compete with them. But they stepped up there, and the boys stood up and threw the ball, each of them, and we kind of marked what the farthest one was. And then very last, we had my daughter get up and throw it with her left hand, and it went probably 10 yards farther than the next closest person, right? So that's a proud dad moment there, teaching your daughter to throw the football and to be able to throw it with both hands. And so that was a lot of fun. But the reason that I share that story is because of my joke about not wearing out one arm and spreading it out to both arms, so I didn't just wear out one arm, right? It's kind of a reach here, but I'm going to compare that with allocating those indirect or overhead costs to the jobs. All right. We want to spread them out so that each job is covering a fair portion of the overhead. So there are numerous ways to do this, and there is no right or wrong way. Any way you do it is going to be an improvement on not doing it, right? So usually what we do is we make a lot of guesses based on what's happened in the past. Okay? What I mean by that is that we are going to look at a profit and loss, for example, for the previous 12 months, and we want to add up all of those indirect costs into buckets. So we're going to use those numbers and put them in buckets. Okay? The next thing we're going to do is we are going to take all of those items in the bucket and we're going to spread them out into different buckets. The reason we're going to spread them out into different buckets, I will explain to you in a minute. But for now, what we want to do is we want to pick a couple of direct costs. So the most commonly used direct costs are materials, labor, and subcontractors. Okay? Those are usually the three big expenses when it comes to your costs. And so what we want to do is go down through our list of all the overhead items that we've marked on the profit and loss. And we want to connect those items with one of those direct costs, right? For example, we have the category vehicle expenses. Well, what is it that's going to make the vehicle expenses increase or decrease? Again, there's many answers to that, many different ways to look at it. My answer is usually that if we have more materials, we will also have more vehicle expenses because it's going to mean more trips to our suppliers. Plain and simple, right? So I'm going to take that total balance and I am going to connect it, the total balance for vehicle expenses, and I'm going to connect it to the direct materials, right? Going on down the list, another common one is insurance, which we talked about. What is going to make your insurance go up or down? The answer to that is either labor or subs, depending on what industry you're in, right? Some industries use a lot of subs, and some industries only use their own labor. So we want to consider that when we're determining that, right? So for most trades, the best thing to connect it to is going to be the labor. So we're now going to take that insurance total for the 12 months and we're going to connect it to the labor, the direct labor for that 12 months, right? So we're going to go on down through the list and we're going to do that for each item that we've highlighted as an overhead cost. Okay? Then we can take all those totals and add them up into our different buckets. So we'll have a bucket of overhead that is related to labor. We'll have a bucket of overhead that's related to materials. Once we have those two buckets, we're going to take those buckets and we're going to divide it by the direct cost for the previous 12 months, right? So for instance, if we had $100 of overhead related to labor, and during that 12-month period, we had $1,000 of direct labor, we're going to take the 100 and divide it by the 1,000, and that's going to give us 10%, right? What that number means is that for every dollar of direct labor that we figure into our job, we need to add 10 cents on top of that to cover our overhead related to labor. Okay? And we're going to do the same thing with materials. And then if you are connecting things to subcontractors, you're going to do the same thing there. All right? So we're going to figure out those different allocation rates. Now, the reason that I use different allocation rates and connect it to multiple direct costs rather than just, for instance, doing a labor burden is because there are jobs that are really high in labor and low in materials, and other jobs that are really high in materials and really low in labor. So if you are putting all of your overhead burden onto your labor and you have a job that's high in labor, you're going to cover your overhead costs fairly easily, right? But if you have a job that's high in materials and low in labor, now that job is not going to cover a fair amount of the overhead, right? So we use the different accounts to help to spread it out more evenly and make our bids that much more accurate, right? So that can be a little bit tricky because it does involve math, but really it's only addition and division. That's it. Okay. And then multiplication, once you know what those factors are, you're going to go back to your process and you're going to look at all of your labor costs for each step in that process. And you're going to add that allocation rate as part of the costs for that step, right? So if we figure 10%, which we talked about earlier, a 10% allocation rate for our labor, then we calculate that it's going to be $500 in labor. We need to add $50 onto that amount. So our labor cost to accomplish that step in our process is not $500, it's $550, right? It costs us more than just the 500. Okay, so let's take a look at one more thing here related to that. When we are allocating those amounts out, we are making sure that our pricing to the customer is covering all those overhead costs, right? With a typical bid, when all they're doing is figuring labor and materials, first of all, our costs are going to be lower than what they actually are. Secondly, because our markup is based on our costs, our profit is going to be less. And third, once we have that profit, instead of having those costs covered up here, instead, we now have to take them out of the profit that we get on the job, right? So it's going to drastically reduce your profit and your profit margins, okay? So that is the reason that we do the overhead and the overhead allocations, and that's a little bit about how to accomplish that. So again, with the bidding, 4 steps. We bid a process. We figure out all of our costs. Number 3 is we mark it up. Number 4 is we compare it back to the market. Okay? So we'll continue on with the markup in our next episode. All right. So thank you very much, and I will talk to you guys later. Thanks for listening. If you found this episode helpful, please like and subscribe for weekly episodes to help you fuel your profit, level up your cash flow, and finance your growth. Until next time, go enjoy some green M&Ms and protect that cash.